The CFTC has just ordered JPMorgan to pay a massive fine in relation to swap reporting failures. This shows the CFTC and the SEC aren't afraid to investigate illegal swaps and aren't afraid to issue fines and other penalties. It opens the door into future swap reporting violations in relation to AMC. So stay tuned and let's make some money. It says the CFTC filed and settled charges against JPMorgan Chase provisionally registered swap dealers for failing to comply with their reporting obligations as swap dealers. The order requires JPMorgan to pay an $850,000 civil monetary penalty and to cease and desist from any further violations of the CFTC regulations. The order specifically finds that from September 2015 to February 2020, JPMorgan failed to report approximately 2.1 million short-dated foreign exchange FX swap transactions. Now, the crazy part is that these unreported short-dated swap transactions represented approximately 51% of the total number of swaps that JPMorgan executed during that same period. So they misreported a whopping 51% of all transactions that actually occurred. This isn't just misreporting the occasional 1 or 2 swaps, or maybe even 50 or 100, but a whopping 51% of all transactions. Now, what's even more crazy is the fact that Rob and Hang Loose have actually run the numbers on the dollar value of these swaps that were misreported. Taking the average swap size data and multiplying that by the 2.1 million trades that were misreported suggests between $100 trillion and $500 trillion worth of swaps were misreported. Because this isn't just $2.1 million worth of swaps, this is 2.1 million individual swap transactions that were misreported. It says JPMorgan has represented that it has reported all of the previously unreported FX swap transactions it was obliged to report, obviously in a self-declaring and self-reporting manner. So nobody's actually investigated to ensure that JPMorgan has now reported all of their unreported swaps. They're just taking their word for it. Commissioner Christy Romero said that I strongly support this enforcement action against JPMorgan, and has said this case should serve as a message to all swap dealers that the CFTC will bring justice for failures in swap data reporting. And this is exactly what I was touching on earlier. We know that Archegos had tons and tons of swaps or illegal swaps with a number of different financial institutions, and all of these financial institutions were misreporting the data. We know that Credit Suisse were helping Archegos take out all of these swaps, and more than likely a number of other banks were also helping Archegos take out the same swaps and were hiding the true data or hiding the true correct data. And that's what enabled Archegos to build up such a massive swap position in a number of different stocks that was flying completely under the radar from the regulators and from every individual other bank. Obviously, Credit Suisse knew the swaps they had with Archegos and they knew they were hiding them well, but what they didn't know is that a number of other banks also had swaps with Archegos. And the exact same thing has been happening with AMC. Tons of these hedge funds and market makers have swaps with these major banks for AMC shorts and AMC puts and other AMC derivatives. That's how these hedge funds and market makers are hiding their true AMC short position via the swaps with these other big banks that are misreporting the data. But as Christy Romero said, this case should serve as a message to all swap dealers that the CFTC will bring justice for failures in swap data reporting. So it's now only a matter of time until the CFTC goes after these banks for more swap data reporting violations, specifically around AMC. And I think this is partially what's causing such a downfall in Tiger Global. Obviously, these major banks have been found out in terms of their illegal swaps and have likely stopped offering these swaps or have stopped hiding these swaps for a number of different hedge funds. And guys, if you haven't already, be sure to sign up to Moomoo using the link in the description below to get 10 free stocks worth up to $25,000 and a guaranteed free share of Lucid on top of that. Moomoo is very easy to use, it's incredibly customizable, they've got tons of technical indicators and advanced charting tools. And from Moomoo's latest customer agreement, they state they do not benefit from your order flow and they don't sell your order flow to market makers like Citadel or to clearing houses like Apex Clearing. They actually clear their trades themselves through Futu Incorporated, which does also not sell your order flow. Unusual Whales have tweeted saying Tiger Global still has lost 50% of its main hedge fund so far in 2022. Tiger Global did post a small 3% gain for June, but all in all is so far down over 50% for the year. This goes to show these hedge funds are still absolutely blowing up and are approaching closer and closer to that margin call position, with even some of the biggest hedge funds like Tiger Global down over 50%. And this is also causing the credit default swaps in a number of these major banks obviously to skyrocket. I've touched on Credit Suisse a number of times in the past, and I've now got an update on their credit default swaps. Dylan tweeted saying, "Whoa, credit default swaps for Credit Suisse are going absolutely vertical." He said insurance against the default of the $14 billion bank are approaching levels not seen since the great financial crisis. A few weeks ago I showed you the credit default swaps for Credit Suisse had just edged past those previous highs set back in 2020, around this 150 or 175 basis point area. But since then they've been continuing to go absolutely vertical, and the credit default swaps for Credit Suisse are now higher than they were back in 2011, almost as high as the 2008 peak. It won't be long until this credit default swap for Credit Suisse continues to rise past the peak in 2008 and shows that Credit Suisse are virtually on the edge of bankruptcy. These credit default swaps or CDSs are getting more and more expensive as these banks get weaker and weaker and run out of cash. But guys, remember, the whole reason the world is falling apart at the moment, the whole reason these credit default swaps for Credit Suisse are skyrocketing, and the whole reason why JPMorgan is failing to report their swap data accurately is because people invested money into that theatre chain. Yep guys, you got it, because we've been buying and holding our AMC shares, the world is falling apart, inflation is past 8%, and these credit default swaps are going crazy. It's likely there's going to be another 75 basis point rate hike in the federal funds rate in the July meeting, all because, you guessed it guys, we bought and held those AMC shares. Sean Williams says, "I think I'm going to start posting this weekly because it's that magnificent." And something that I think that was originally a brag has actually turned into something very, very worrying is cryptocurrency exchange FTX bragging they have more than $2 billion to backstop the crypto industry if needed. Sam said the worst appears to be over for the liquidity crunch in the crypto market, but if not, he's got a whopping $2 billion to backstop the industry. But as Hellspawn Crypto tweeted, he said $2 billion for an $800 billion market cap industry doesn't seem like it's going to cut the mustard. CNBC reported saying that Sam Bankman-Fried, head of one of the largest cryptocurrency exchanges, FTX, said he and his company still have a few billion on hand to shore up struggling firms that could further destabilize the digital asset industry. They've said FTX has become crypto's white knight in recent weeks, throwing lifelines to digital asset platforms which have faltered as cryptocurrency prices have cratered. Sam said we're starting to get a few more companies reaching out to us. He said those firms are generally not in dire situations, but some crypto exchanges may still fail. But I personally think that not all is as it seems with FTX. As Versus BTC tweeted, he said a big revelation in the Voyager Chapter 11 filings. He said Alameda or FTX or Sam Bankman-Fried actually owes Voyager $376 million, and he said this raises several questions and concerns. So obviously FTX did lend over $500 million to Voyager Digital, but at the time Voyager went bankrupt, FTX actually owed them money. FTX had obviously borrowed money from Voyager to the tune of $376 million. You can see from this screenshot, obviously $654 million was lent out to 3 Arrows Capital, but $376 million was lent to Alameda Research or FTX. He said, how is Sam Bankman-Fried supposed to bail out the crypto space when he himself is in a lot of debt? He said, was the failed credit line an attempt to keep Voyager afloat so that he has not to repay his debt immediately? He asked, is Sam Bankman-Fried or Alameda or FTX really in such a good financial position? How much debt do they owe to other lenders such as BlockFi? Maybe they lent out this $500 million to Voyager and then practically instantly recalled the majority or all of the loan and even borrowed additional cash. Maybe the exact same thing happened with BlockFi. Maybe they lent BlockFi 400 million, but then asked for it back and potentially even borrowed more. So even though FTX is potentially saving all of these crypto firms, it seems like they're not in the best financial position if they only have $2 billion to save more crypto companies, and they potentially are borrowing a lot of money themselves. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.